what do they say? Recession is not inevitable. Well, most people are like, you know what, feels like that we're heading that direction. And I certainly hear them not to say when, if, whatever, but that idea of the economy slowing down is specifically what the Fed is trying to do to tame or curb inflation. Okay, so let's talk about that. I think we have to have an educated response to that, maybe for ourselves, just for our own confidence. What does an economic slowdown mean to the real estate business? What will it mean to the real estate business as the economy slows down?
Zach, what do I do when a video goes viral? How do I milk that for all it's worth?
All right, Jake says we're live, so we're live. So hey, everybody, welcome to the biweekly show that we do with David Childress from Keeping Current Matters, where we talk about the basically the economics of the real estate market and the economics of what's going on out there and the trends in the real estate world and the rates. And we're going to be talking about the rates, the Fed, rising costs. The market might be coming a little bit more difficult, but it's not impossible. And I'm going to give you an amazing piece of advice, but you have to wait until David's done talking. So wait till the end. I'm going to give you an amazing piece of advice that's going to help you weather any storm. All right, David, what do we got? Welcome, man. I feel like I talked to you yesterday, but it's been 2 weeks.
It does. Time flies. Yeah, I mean, we've certainly seen a shift in the market, and I think everybody's no surprise to anybody on the call. That, Johnny, we were talking about before, if you've been in this business long enough, boom, it happens, it shifts, and the market of yesterday is in the rearview mirror, so to speak, and happens on a dime. I always think of that analogy I was telling you before of anybody that has kids or watched The Lion King, and that when the medicine person hits Simba over the head and he goes, why'd you do that? And he says, don't worry about it, it's in the past. And the COVID market and the market that we've been in is clearly in the rearview mirror right now, and things shifting. And so we'll talk about that. You can't do that without talking about the interest rate scenario and the Fed and all that. I think, fears of economic slowdown are on top of a lot of people's minds and certainly being covered extensively in the news, and then I think a lot of us wondering how's this year going to end up. So I'm going to talk about that as well from a forecast standpoint and anything else you want to talk about. So,
yeah, and everything that we talk about and stuff like that, just so everybody knows, what a lot of economics really is looking in the rearview mirror, looking at what current trends are and kind of having a projection. There's things going to happen tomorrow, right? They're probably going to be fighting in Washington, D.C. until the day that we all pass, right? But there's things going down there that could adversely affect the market tomorrow. We don't know. So what we're going to do is take a stab at trends, what's been going on, and where the experts think we're going. And it is getting crazy out there. If you're watching this, if you're watching it on the Zoom or if you're watching it on Facebook, comment in there where you're from and what's the market doing there. Have you seen a slowdown?
Yeah, that's a great question, because we know all over the country, different markets, different scenarios. But Johnny, I want to go back to what you just said, because you're absolutely right. We talked about this last week or the week, last couple of weeks. I know where I brought that perspective, the difference between perfect and expert advice. Nobody can give you perfect advice. Nobody can tell you where interest rates are going. A lot of people want to, but this market certainly is very, very difficult to forecast and quote be right. And that might be my encouragement. Don't try to be right, but I can tell you what we can be certain of is what the Fed is up to, because they told us what they're up to. And I want to break that down. So, there is a way to create certainty in this market by being the expert, by saying, hey, here's what I know and here's what I don't know, but here's how I'm on top of this. And that's what I hope to bring you. Johnny, you always bring up the video that you can record and the things that you can get out there with this information. We always want to get that to folks so that you can get the message out and be that, that voice for folks, out there that are wondering what's happening in real estate. Because I'm going to say there are a lot of questions, a lot of people going, how's this all going to end up? So I'll hop in and talk about interest rates. I'm going to use a graphic that we've used before. This is look at that 30-year fixed chart all the way to the first week in January, and this is the business. Max Dupree wrote a book called The Art of Leadership a while back. It's kind of a sort of textbook for leadership, not in our business, but for leaders. And the first line of that book is the leader's job is to define reality. Well, this is reality relative to the real estate market in the first 6 months of 2022, right? The rising interest rates starting to moderate the market, shift the market, whatever word you want to use right there. And we are seeing impact in that. Now, I mentioned nobody knows where interest rates are going to be in 2 weeks or 4 weeks or whatever that's going to be. People are going to, definitely, say, here's what I think, and by the end of the year and this, but the bottom line is nobody knows. Even people that are following this and are, I would call, interest rate experts, they can't tell you exactly, but we can say a couple of things we know for sure. One, this is all about inflation. The Fed came out, raised the Fed funds rate 75 basis points, what sort of spurred on this, jump in interest rates, and sort of the big shift, big catalyst for the shift in the market. And all of their work is to tame inflation. Let's be real. That's what this is all about. And they came out and they told us what they're going to do. And now you can debate what they said. You can say, I think they should do something different, or I think they this, that, or the other, but you can't deny this is what they're trying to do. And here it is, Johnny. I want to break this down. So Fed Chairman Powell came out on the 15th, raised the Fed funds rate, and they said this relative to our business. I'd say if you're a home buyer, somebody, a young person looking to buy a home, you need a bit of a reset. You may have seen that on an Instagram post or something like that. It's been out there in a lot of different places. But his next few lines were very, very interesting. He said, we need to get back to a place where supply and demand are back together, where inflation is down low, and where mortgage rates are low again. So I want to break this down in three things they're trying to do. First thing right here, they're trying to get in the real estate market. What they want to see is moderating demand, the frenzy of the last 2 years, starting to bring the frenzy out of the market. And they want to see supply increase. And oh, by the way, that is happening. We're seeing an increase in inventory, which is a measure of the velocity of the market due to rising interest rates. So what they're trying to do, that is certainly happening. All of this is in support of this next piece where inflation is down low again. And there are a million different opinions about that and how they should be doing their work and all the reasons for that. A lot of those, many of those, if not all of those, outside of our control, but all of their work is to tame inflation. And then what they want to see from that is that mortgage rates come back low again, whatever that means relative to low. I don't think that means 2 3/4 like we saw in the historically low interest rates of the pandemic, but certainly rates in an environment that we consider low. So that is their playbook. They told us that. Now they'll come out again in the next Fed meeting and they'll tell us, there's what we're going to do now. That may change. They've said, we don't know if we're going to raise by 50 or 75 basis points next time. And so we'll watch them. We'll see what they're doing there. Remember, the Fed does not control interest rates. They can only hope to influence interest rates, and they certainly are influencing them right now. But Johnny, this portends the impact for the consumer. This came out, the buyer's median priced home on the 1-2 punch of record high prices and rising interest rates have pushed the monthly mortgage payment about 64% more than last year, tacking on over $800 to the cost of financing. That's the bottom line. That's the truth of what a buyer is feeling today, that's going out and getting a mortgage. Now, I want to say something about this, Johnny. I'm interested in your perspective, as always, as somebody who's been in the business and expert in this. I would offer this. I'm not suggesting that the coming market is not going to be more difficult, or there's not going to be pain involved in those types of things. I always look at it, generally who I am is optimistically, where is the opportunity? But I will say this, we're moving from a market during COVID where a lot of buyers felt like buying a home was impossible. They lost out on bidding wars, they lost out on multiple offer scenarios, and they dropped out. We are going to see a rise in inventory. It is going to be more difficult and painful from an economic standpoint to go out and buy. but most people I know, Johnny, would take more difficult over impossible any day. So I think there's opportunity. I think we're going to see more inventory in the market, but certainly it's costing more to finance a home right now.
Yeah, and I'll touch on that, and I'll probably ruffle some feathers, but it's okay because it's my truth, right? So
Sure.
whatever. But it's gonna get to a market where you're gonna want more listings, right? Carrying 10 listings was a dream if you could get them in the past year or two, right? If you could get them. Now carrying 10 listings is going to cost money. So what's going to happen is the professional real estate agent who budgets their money and who runs their business like a business, who has been putting 20% of their commissions away for marketing and everything else, they'll be able to market these listings, right? The person that didn't put away, that was been, and man, I hate to even say this, but living commission check to commission check, or on the balance wire of just survival, which is the majority, they're going to have a hard time. So what's going to happen is the disciplined person is going to excel, and the one that hasn't been disciplined or hasn't been able to break in yet, they're going to potentially suffer, right? That's just real economics.
Right.
But the combative piece to that is that anybody can stand out for free making video. And I wish people would understand that using your content, just say what your content says, and you look like an educated person. And I'm going to touch more on that towards the end, because it leads into the segue of how you can really weather the storm.
Yeah. And I think that's the message, getting the message out there and talking about it. So let's kind of take the next step of this. Fed's doing this action, inflation's costing more. We know that. And all of this is sort of taking this economic slowdown, recession talk to a fever pitch, right? If you've seen any of the headlines, like, what do they say? Recession is not inevitable. Well, most people are like, you know what? Feels like that, that we're heading that direction. And I certainly hear them not to say when, if, whatever, but that idea of the economy slowing down is specifically what the Fed is trying to do to tame or curb inflation. Okay, so let's talk about that. I think we have to have an educated response to that, maybe for ourselves, just for our own confidence. What does an economic slowdown mean to the real estate business? What will it mean to the real estate business as the economy slows down? So I want to cover that for a couple of slides, give you some information on that. This came out of the Wall Street Journal at the end of last week. Recession fears surge among CEOs. In their latest survey, it says 3/4 of global CEOs say we are in a recession or will be in the next 12 to 18 months, according to a survey. That's certainly based on their opinion. And first quarter in this country, we saw negative GDP. A lot of people saying, well, that was because of the trade issues and the supply chain issues and all that. And we're coming up on a quarter where there's likely very little growth. And so that's why they say we may be in it. You'll be told about a recession. It's in the rearview mirror, so to speak, or, as they look back on consecutive quarters of negative GDP. That's the widely held, definition of a recession, but certainly you can get more technical than that. But I want to give you a little bit of information on what would this mean, or what has this meant for housing in the past. And so this is a great quote here from Mortgage Specialist. It says, throughout history, during a recessionary period, interest rates go up at the beginning of the recession, but in order to come out of a recession, interest rates are lowered to stimulate the economy moving forward. Historically, we've seen a repeated uptick in interest rates followed by lower interest rates. You've been in the business long enough, that in a recession, typically interest rates go down. Why is that? Because the Fed understands the economy will not pick back up again as they slow it down without housing and the economic impact of housing. And what they don't want that is to overheat, like what we've seen, and a lot of reasons for that. So, likely in a recessionary period, economic slowdown, you go back in time, this is what's happened. And, if you remember that slide, Johnny, we've used many, many times, recession doesn't equal housing crisis and the impact on prices. If you followed us here on this call, you're familiar with that. Well, this is a different look that I want to give you. This is a look at mortgage rates throughout, recessions going all the way back to the early 80s. Every recessionary period has one thing in common relative to our business. Every single time we've gone through a recession in this country, interest rates have fallen. Okay, so it's not always true that the past is absolutely indicative of what will happen in the future, but we should learn from that. We can educate based on that. And we can say, hey, here's what's happened in past economic slowdowns with the cost to finance a home. And that's a very, very big piece. Matter of fact, it's Fortune Bulls is down over the past 5 recessions. Mortgage rates have fallen an average of 1.8 points from the peak seen during the recession through the trough. And in many cases, they continue to fall after the fact, as it takes some time to turn things around, even when the recession is technically over. So I think again, I don't think that, Johnny, is anything that maybe folks don't know, but hopefully gives a visual element to it to be able to answer that question. If people are wondering, what is that going to mean? What would it mean if the economy slows down to housing? And you've got the pricing piece on the study we've done there. You've got the interest rate piece on there. We can bring certainty to people and say, look, this is what's happened in the past in these times in this country.
Yeah, 100%. The success leaves clues, they say, right? So doesn't the past. But also take a look at that 1980s. I mean, you're at like, I think 13 and 11% and things like that. So yeah, the interest rates are going up, but they're half of what they were still, and people bought in the 80s. So every market, David, I like to say this to people: there's closings that happen in every market. You just have to determine which agent's sitting at the table.
Totally. Yep.
Right. And so it's going to happen. We have to get back to some traditional methods and old school salesmanship, if you would, or salespersonship. But it's possible, and it's going to thrive, because you know what? The populations of humans isn't shrinking, right? It's growing. So people are going to need a place. It is a temporary snapshot, right? Yeah. There's some areas that seldom get affected, right? If you're in the greater Nova, DC area, that part of Maryland, that's always hustle and bustling because the government doesn't sleep, right? Yeah. The military doesn't stop. So you got to take a look at this entire thing as it's normal. We've just come out of an unprecedented market. That wasn't normal, right? We're going to a normal market. It might be fewer and further between. You might not be able to help 100 families with their dream of home ownership this year. It might be 50, but that's still a pretty good living, right? So you might have to adjust your expectations a little for the time, right? Yeah. For the time. I can tell you during the last recession, there's people that I know who owned brokerages that I saw, no disrespect or anything meant, man, you got to survive. But they were a hostess at a restaurant, right? Because why? I don't know, right? But that is a reality. That is a possibility. I don't think we're headed there. I think the strong is going to survive. And this is why your reputation of being a knowledgeable person is so important, right? And sharing this information, and not only just sharing this information, digesting it yourself and understanding it yourself, right? So when somebody says, oh, interest rates are too high, well, what are they going to be if you wait? Because 6 months ago wasn't the right time to buy or sell, is now. How much more is it costing, right? So
I think that, Johnny, that idea that we are going through this new market, a shift in a market, and I'm going to give you some perspective on that here in just a minute. But just like in 2008, tough market, toughest market of any of us that have been in the business ever, and I would argue back since the start of the modern day housing boom, 2008 was the roughest market. People won in that market. People excelled in that market. Mm-hmm. Businesses were built in that market, right? And so I think that's certainly a truth to that. Let's shift, because I want to leave some time at the end. I know you have a couple things. Let's talk about this year, because that's exactly what you're talking about, is what will the opportunity be? And this is more for us on the call. I don't think anybody, Johnny, buying or selling a house this year cares how many houses we sell in this country. For some, they don't care about that. Ooh. We care about that in our business. And I think sometimes my caution would be careful who you listen to. Be careful of what's going on in the office, and be careful of what that perspective is, because, I want to show you what really we're up to. And some of these slides, I used last time we were together, Johnny, and I've sort of reiterated on them to give you a look at different things. But let me start off with demand, just give you perspective on demand right now. This is a look at showing time. We use that. We've used it since we've been doing this call, Johnny. All that gray area is pre-pandemic demand in 2017, 2018, 2019. The blue's the last 2 years. The green's the most recent information we have.
Yeah.
So that just visually, I want that to sink in. That's been what demand has looked like during the COVID years. Okay.
Yeah.
And we've covered exhaustively the reason for that, interest rates driving a lot of that, the meaning of home driving a lot of that. But we saw this uptick in this anomaly market kind of blow in, probably the best market anybody's seen in their career in the last couple
Absolutely.
of years. And we're
Absolutely.
coming out of that market. That is my message today. Heading somewhere back into a pre-pandemic type of demand market, which, oh, by the way, Johnny, 17, 18, and 19 were great years in our business. The
Sure
best
was.
years since the crash, respectively, in each one, I believe.
Sure was.
And so I would want to give you that perspective. If you're sitting there talking to somebody you work with, and they're like, well, I don't know how this is all going to end up. Well, here's how it's going to end up. Those that have the right perspective, and I believe there's an element of being successful that is having an optimistic mindset, not blind positivity, not sticking your head in the sand and saying nothing's wrong. There are issues we have to solve in this market. We have to earn the right to solve those issues. But this is not an impossible scenario like what we were talking about on the front end.
Yeah.
In this picture, kind of paints, it gives a 1,000 words, so to speak, on the reality of what demand has looked like over the last couple of years. I want to kind of continue on this and talk about existing home sales. May just came out this week. Just look at the same kind of look. What was 17, 18, and 19 pre-pandemic? What did we see last year in existing home sales, and where are we forecasted on the seasonally adjustable rate? 5.4 million right now in existing home sales, somewhere in that pre-pandemic range. Okay,
Wow.
for existing home sales, you're starting to see things start to line up here and go, okay, that looks familiar, right? It looked familiar on the last slide, pre-pandemic right there. All right, same thing right here. Very clear signs that will be the range that we'll be in. Again, I'm going to go back to very, very good years in our business. This should be very encouraging to people. This is a look at 2022 total home sales forecast. Johnny, the thing that's very interesting about this, Fannie, Freddie, NAR, MBA, all forecasting at least 6 million homes to sell in this country this year. This will be the best year, the second best year in the last 15 years in real estate.
Yeah, man.
It'll only be beat out by 2021, that last year. It'll be the second best year in real estate.
That's what I hope everybody understands is we're coming down from the peak of Mount Everest, right? But we're still on the mountain.
Yeah,
right?
And it brings perspective, right? You're looking back up, going, we're not there. We're not where we were last year, and we all need to understand that really, really well. We are shifting. It is making it harder for folks. But I want to end on this slide before I turn it back over to you, Johnny. This is the best news I've seen come out recently is updates to inventory. Realtor.com's original forecast this year, 0.3% growth in inventory this year. Their updated forecast, 15%. Okay, so there will be more inventory in our business this year. That is absolutely happening right now, and we will continue to see that happen. And what are the two things, Johnny, that we wished for last year? Prices to slow down a little bit, not sustainable, and we would have more inventory. And guess what we got? We're getting prices slowing down a little bit. We're getting more inventory coming back into the market. So I don't mean that to say they're not going to be issues. It's not going to be more difficult. I believe it will be. But I think for the true professional that's educated, that understands this market and has that perspective, they will be very successful.
Yep. I agree with that too. And that brings me to the point that I want to talk about success, right? What does success look like to you? Right. Everybody's different, but I can tell you that no matter what success looks like in real estate, that relationships are involved, plain and simple, and reputation is involved, right? Character, these types of building blocks. Unfortunately, a lot of real estate agents I have seen are very reactionary. They're worried about right now because they're trying to pay the bill or get to this lofty goal, right? No offense. That's fine if that's what you're doing. But the people that need you and the business that's out there is so much bigger. If you could just take the blinders off, per se, the right now, if you could look at a long-term strategy, right? Just like investing. You have short-term investing and long-term investing, right? Retirement, Roth IRAs, whatever, right? There's different vehicles for different things. And you should look at your business in the same manner and build a reputation in your community. Smart people want to work with smart people. Okay. Think about your market. How many real estate agents? I was talking to somebody from Denver the other day. She said 40,000 agents. So what are you doing different? How do you look like the true professional? Right? You do that with knowledge. You do that with understanding. So taking what David's talking about will allow you to connect with more people of significance. What I mean by that is everybody's going to look you up online. That's the way that it is, right? So understand it. Does your website look good? Are there videos there of you explaining these things? Or is it just me, sell, sign in, opt in? Because when you can start to reach out to people that are, I'm going to give you money right now. I made lots of money doing the relocation for a hospital. Doctors, surgeons constantly come in and leave. Nurses come in and leave. It's usually around, I think, the first week of July, because June, the fellowships end and everything else like that. If you can get in with the HR director or the facilities manager of a hospital, they're going to look you up online. But if you pass the test and you get past it, okay, this is that long-term strategy. Then all of a sudden, here you are, the knowledgeable person. You look good online. There's no pictures of you on social media with a cigarette in your hand and a drink looking like trailer trash. You look everywhere they look, they see a professional. And then all of a sudden, you look like a knowledgeable professional. Because take that Denver area. There's 40,000 people. How are you looking different? How are you standing out? How are you being more professional than next? Because you know what? I don't think 40,000 houses sold last month in Denver. So if you want business, clean up your reputation. And I don't mean that in a negative way. Clean up your reputation, clean up your image, clean up your branding, and be a knowledgeable person. And for, what is it, David? $30 a month?
Oh yeah. $29 a month for KCM, and yeah, I think, Johnny, I think you, in this market, I think you have to have it. I think you have to be, and listen, you don't have to get it from KCM, but you have to get it from somewhere. You have to have that information to be the knowledge broker, to be the expert in your market.
Because if you get in with a hospital and you do the relocation for doctors, guess what? Doctors buy expensive houses. I don't care where in the country.
Too.
Right. Yeah. And so now all of a sudden you can brand yourself. If you want to get in with divorce attorneys and estate attorneys, this is networking. This is how business is built. They're going to look you up. Now, all of a sudden, when you start networking with them and they start to get your newsletter or they start to see you on social media, because they're on there too. And they're going to be like, wow, this guy's always bringing good, excellent content. And now what's happening is people are watching you from afar. You don't even know they're watching you. That's the parasocial relationship, right? They're watching you, getting to understand you and stuff. Now you're positioning yourself as that knowledgeable real estate agent in the community. How many people in your community are doing that? It's a rhetorical question. You can look it up later. And you probably already know who are the agents that are standing out most in your market.
Yeah.
Right? There's only a handful. Be one of them. Anyways, that was my big
Absolutely.
announcement. That's my big thing. Go to the hospitals, find the HR person, get on LinkedIn, find 6 degrees, and start doing awesome video, because they're going to look at it. And then when you make millions of dollars, you can thank Keeping Current Matters for $30 a month, right? Y'all I know people in here that spend more than that on martinis every single day. So, your choices you make define you.
That is
anyways. Try KCM.com. David, what else you got? Anything else?
I plenty other things going on. I will tell you this, something we can talk about next time. The number one question I'd be prepared for right now, it's not the interest rate thing. It's folks saying, I'm worried that it's going to be less, 6 months or a year from now. So I take your local information. We've got all the information at KCM. You can go grab it. But that is the question people are worried about right now.
Right. And that would make a good blog title.
Yep. Absolutely.
So, there you go. Make blogs, make videos, use this content. So when people are finding you online, and push it out there online, you're going to look like the most knowledgeable person, and you can thank KCM. Anyways, David, I'll see you in 2 weeks, I guess.
Sounds like a plan.
All right, y'all, take a look at Keeping Current Matters. Try kcm.com. If you need any of the slides that David has, email him, bug him at david@keepingcurrentmatters.com.
You got it. Reach out. All right.
Peace.
Take care, Johnny.